As war breaks out in the Middle East, there is probably one question that a lot of you guys, my viewers, are asking yourself. Well, probably many questions, but I'm not here to talk about politics or take favoritism on any side of this war. War is tragic, and I am deeply against it under all circumstances. But what we can do is try to prepare from an economic perspective. And so what we've done over the past 24 hours is look at what this could mean for the markets moving ahead. So without further ado, let's dive into it and look at historically what has happened and what could cause these things to get much, much worse or much more volatile. As of right now, there's a lot of things that are unknown. And over the course of the next few days, we will be keeping a close eye on that. But one thing that I can say probably is certain is volatility and uncertainty moving forward. So without further ado, let's dive into a little bit of a history of what's going on right now and how things like this have historically affected the markets and what we can expect moving forward. And most importantly, how you can prepare yourself for any situation that may arise. So as you guys know, there's official war has been declared by Israel in the Middle East after it was invaded by Hamas. And this could get very, very much more involved. We know that the U.S. has sent carrier crafts in the sea out toward Israel, and there's a lot of speculation that Iran was supporting Hamas here. There's a $6 billion that was unfrozen of Iran's money that was originally frozen in the Korean bank accounts in South Korea, and so I'm not going to get into this either because this is pretty politically charged. But you can see here, if you want to dig further into this, there's been a lot. So basically, Jennifer Griffin said, and she's I think a political correspondent from Fox News, saying those who are saying that the $6 billion that was part of the American hostage release negotiated by Biden administration likely fueled the Hamas invasion are missing some key facts. None of the money has been spent yet. It remains in Qatari bank under U.S. Treasury watch. And then Gabriel, who is also very credible, he's a former State Department advisor of Iran, wanted to come out and say, I'm sorry, Jen, but you are simply unfamiliar with Iranian budgeting practices and how the Iranian regime and Hamas make decisions. Iran normally has to allocate its limited foreign exchange reserves for food and medicine in advance to facilitate trade flows, not anymore. Iran can now devote $6 billion of its unrestricted funds toward operational and logistical support for terror proxies, including Hamas, and it will do so through Central Bank of Iran, which has received received a sanction waiver last month as part of the hostage deal. And so it goes on to talk about the fact that when Iran is looking to see if they can afford a sustained war, they have to look at their reserves. And if they know that they have $6 billion of reserves sitting on the sideline, that means that whatever is in their treasury prior, they would be able to spend that knowing that they have $6 billion in reserves coming, plus the money that they're making from their oil exports into China, as you can see, is increasing, as of last year, $30 billion. So that is kind of the speculation there. Now, Kim.com, obviously a very controversial person who has an extreme, I think a generally pretty good worldview, however, also extremely divisive and obviously has a big disdain toward the United States. But I think that there's some fair argument here. Understanding the Hamas attack on Israel, Iran is aiming for the confrontation with Israel and the United States. The success of Russia in Ukraine is encouraging Iran to undo decades of hostile U.S. foreign policy in the Middle East. A bankrupt U.S. government has just been invited to another war. The timing is opportunistic. The U.S. government is forced to print trillions of dollars as it struggles to raise new debt. Another war would lead to a significant increase in inflation and an accelerated economic decline of the U.S. If Iran mines the state of Hormuz, the global energy crisis would become critical. The Biden administration has used the majority of U.S. oil reserves to stabilize domestic oil prices. Iran can increase the pain for the U.S. government significantly. Ukraine is turning into a major defeat for U.S. and NATO. A new front in the Middle East would accelerate the U.S. decline. The U.S. government and its Western partners simply cannot afford it. Russia and China would benefit most. Iran understands this and is playing into the hands of its partners. So it is obviously, yeah, so I'll leave it at that. I'm not going to give an opinion on it. But here's some idea of how much war has costed some prior wars. So you can see, obviously, in the early days, much less, as this was a long time ago, right? But let's look at some of the more recent wars. The Iraq War cost $1.7 trillion. The Afghan War was $2.2 trillion. The Gulf War, $102 billion. Vietnam War, $843 billion. World War II, $4.1 trillion. So you can see that obviously this is very, very expensive, and right now the U.S. doesn't have the money to sustain this, or even economically on a global level, right? A lot of debt right now. We've talked about on this channel the U.S. debt's quite a bit, and so obviously we need to print to be able to sustain something like this. So as soon as this invasion happened, the Tel Aviv or the Israeli stock market plunged 6%, and but what we need to look at is so what we're going to get into now is how this could affect the markets, Bitcoin market, crypto markets, as well as normal markets as well. So attack on Israel, what investors, economists, and strategists are saying about the effects on markets. So the fallout in markets will likely be determined by whether the conflict spreads to the rest of the Middle East region. Iran is both major oil producer and supporter of Hamas. Geopolitical crises in the Middle East have usually caused oil prices to rise and stock prices to fall, said Ed Yardeni, president of Yardeni Research. Much will depend on whether the crisis turns out to be another short-term flare-up or something much bigger like war between Israel and Iran, which then would probably include the United States as well. The entire Middle East is pretty much against Israel here, and the United States is a big ally of Israel, and would like to see the pro-democracy state continue to survive. And we've seen also many other Islam supporters saying now they would love to see Israel wiped off the face of the map. So if Iran comes in and gets involved and attacks Israel directly, then I think the United States will get involved. And putting on tinfoil hat, I'm not doing this here, but there's a lot of speculation on the crypto Twitter or Twitter's timeline saying that maybe this whole thing is intentional. One thing that I thought was really interesting was, Israel has been known to have one of the best defense systems in the entire world. There was a video too, I'm not sure if you guys saw it, I don't have it pulled up right now, but one of the Israeli army, a lady from the Israeli army was saying that, if a mouse crosses the border, they know about it, right? They've got incredible defense. They've got the Iron Dome, which is the anti-aircraft missiles. So how is it that all of these Hamas troops can paraglide, or paratroopers can come into their airspace unnoticed and also just walk across the border the way that they did? That's certainly very, very strange. But anyway, let's go to Zero Hedge. Says the conflict's course is uncertain, but will very likely escalate, possibly contributing to a significant risk-off environment over the next 1 to 3 months. Think of Russia's invasion of Ukraine in 2022. And then we go into the most extreme scenario involves Israel striking Iran's nuclear facilities at 20% chance. This could spike oil prices well north of $150 billion. So, it's $150 per barrel. Now, if oil prices spike up, now we know that CPI, or inflation numbers, are measured, a large chunk of that measure of this consumer price index is measured by the oil prices. And we also know that the oil reserves, over the past 6 months or whatever, in order for the U.S. or the Biden administration to lower the prices at the pump, they were selling off these strategic petroleum reserves. So, whereas before there was many years of oil in the reserves, now you have just 17 days left of emergency oil in the United States. So there's no more reserves essentially right now. So there's nothing else to pull from. So if the prices of oil skyrocket, which they likely will, this will lead to massive inflation of the United States and puts us right back into some sort of economic crisis. So now let's look at historical conflicts, wars, and what they have meant for markets overall. You can see that most of these have some sort of extreme, but albeit quick, sort of dip, right? You see here in the Vietnam War, you had this dip, not so much, but that was a very long time ago. The Gulf War, you had this kind of dip before a run-up in the markets. Same thing here with the Afghan War, a major, but you see how narrow these dips are. They're usually kind of dips of uncertainty, which is what we have likely ahead, followed by some sort of rally. The Iraq War, a dip by a mega bull run, and then again the Crimean crisis, a dip before some sort of nice rally here as well. So are we going to have a black swan event? It could happen, especially if this turns into, it spreads beyond just simply the Palestine and Israel geopolitical area and expands out to Iran, and the United States gets involved, possibly Lebanon, and this turns into a Middle East crisis, and then multiple wars fought on multiple fronts as well. We still have Russia and Ukraine going on, with U.S. supporting Ukraine in this situation, and then we also have China threatening Taiwan for the semiconductors as well, and we know that that's a really, really significant part. But if you've got all these distractions happening at once, it weakens the ability for the U.S. to get involved on three major war fronts here. So just so you guys understand how war affects the modern stock market, I just highlighted some key points for you. From the start of World War II until 1939, until it ended in late 1945, the Dow was up a total of 50%, more than 7% per year. So during two of the worst wars in modern history, the U.S. stock market was up a combined 115%. Wrote Ben Carlson, Director of Institutional Asset Management at Riltz Wealth Management, in an article about counterintuitive market outcomes. The relationship between geopolitical crisis and market outcomes isn't as simple as it seems. So you can see here too, another example is after Russia invaded Ukraine on February 24th, 2022, it rattled global markets. In the US, the S&P index fell more than 7%, and 7% in the stock market is dramatic in the crypto markets, usually, right? But you'll see this exception here in just a second as I go to some of the charts. 7% in the days and weeks immediately following the incursion, as the U.S. and other nations stepped in severe economic sanctions on Russia, and investors worried about the impact of commodity prices. But a month later, markets had rebounded, and the S&P was trading at a level higher than before the invasion, even as prices of oil remained elevated over $100 a barrel. And why do stock markets remain resilient through wars? In the U.S. context, stock markets have tended to shrug off initial downturns predicted by conflict. In some ways, wars can benefit economies not directly affected by the conflict by boosting industrial production to meet the military needs of those engaged in battle. The development of new technologies, some of which can be applied in the private sector, is also spurred on armed conflict. So, of course, when wars happen, World War II pulled the U.S. out of the Great Depression, right? And then you had the raging 20s after World War I. And so this historically has always been a way to pull out, the U.S. out of really bad economic times. As you can see as well, too, some of the U.S. Congress and Washington has been buying up all the kind of war stocks as well. Many bought defense companies such as General Dynamics. Numerous Republicans bought heavy into oil plus energy companies. And you can see just down here some of the screenshots of that. But let me show you that here you had the Russian invasion started the 22nd of February, which was right around here. And then you can see that there was a rally from that of 25.49% in Bitcoin. And then also we have here the SVB collapse. This is showing that there's a good chance that when you have times of crisis, these flight of safeties into other assets, such as like now hopefully we're seeing Bitcoin become a a flee of safety, the same way that gold has historically become a flight of safety as well in these really scary times. But you can see the SVB collapse over here on the 10th of March, which was this collapse right here, and then a rally of 59% essentially in the Bitcoin post this as people fled to Bitcoin for safety. So what does this all mean right now? We have a lot of uncertainty right here. And so what am I doing? So, as if you guys have been watching my channel, that one of the things I have been doing as I'm overall bullish, and I think that no matter what happens here, 2024 and 2025 are going to be incredibly bullish years for markets. We talked about this last week, right? I thought that on a macro level in the stock markets and of course in the crypto markets as well, it's going to be huge, massive bull run. So I am bullish, and as you guys have been watching my channel, you know that I believe that the closer we get to November, the less likely we are to have some sort of black swan event. However, things have shifted now where if this escalates over the next few days, we can have a black swan event for sure, as we've seen before with COVID, 9/11, things like that. But these often follow with bull markets because it creates a black swan event and the economy comes crashing down, and then the U.S. government and treasuries and Federal Reserve need to step in, print money, get stimulus, and this, as we come into an election year, 2024, this would have to happen. So, but you need to be cautious right now. I would highly suggest being extremely careful if you're leveraging any positions, if you're leveraging long or short. Volatility is going to be insane. Uncertainty is insane. And if you have any leverage positions open, like I do in Aave, for example, make sure that you have enough collateral to sustain even a 50% drop in Bitcoin. Make sure that your assets are protected and safe and don't get liquidated. So I've added more collateral into my Aave position right now because a black swan very likely could happen. But remember, guys, after a black swan, if it does happen, is more than likely to lead to an insane bull run with tons and tons of money, likely trillions of dollars getting printed and injected into the economy. And so that's how we're going to move forward. So I don't have answers for you guys right now on everything, but we will be following this very, very closely as things evolve. We're going to be watching this like a hawk, and I will be bringing you daily updates on this if they're necessary. My heart goes out to everybody in the Middle East right now. I am very, very against war, and I wish there was another way to settle this. Following crypto Twitter, Twitter in general has been absolutely shocking. The past 36 hours or whatever, it is devastating and heartbreaking to see all of this death and destruction. And my hearts go out to everybody in the region, everybody's families who are affected by this. And I will try to focus on the markets and the economic outcomes of what's going on. There's plenty of people covering the war itself, and I want to remain pretty neutral on this whole event. That's it for today. I'll catch you guys on the next one. See ya.